Hello, ladies and gentlemen, this is Greg McLeod from the Elite Traders University and the Forex Cash Machine. So good to be with you here on the 16th of June, 2021, and it is FOMC day. It's rate announcement day, in which the Federal Open Market Committee, or actually the U.S. Central Bank, is going to give their guidance for interest rates in the U.S. And very important. Traders all around the world will be watching this announcement, as it's going to, as foreign currencies are chiefly moved by interest rate decisions. Okay, and especially after in this pseudo post-pandemic environment. You know, we're seeing some inflation worries coming through the pipeline. We see Paul Tudor Jones ring the inflation alarm, signaling that he's going to jump into inflation trades like buying commodities and oil, gold, Bitcoin. These things are hedges against inflation, as purchasing power is decreased by rising prices. Now, the Fed, on the other hand, is saying that don't worry about the inflation, that it's transitory, means that it's temporary, means that it will go away. It's just due to the economy restarting after almost 15 months of being shut down and locked down due to the COVID-19 pandemic. And so the market is looking for guidance from the Fed, and you'll see I'm focusing on the movements in the euro dollar, and looking at some chart formations as well. I've already entered some trades, and I am short the euro right now, and so this is kind of it's a wee bit risky to trade ahead of the news announcement, and a lot of things can happen. Sometimes you have an expectation for prices to drop, like I have in this case, and then price spikes up. We could possibly see we have a rising trend line, and we could bounce off that trend line and possibly come back in that 120-140 area, right? Or my prognosis is that we come down and test this area down here, down in the 120 90 area or so. So we're about it's 1:48 Eastern time, and so we've got about 12 minutes. So if you can hear me and see my screen, can you say hi or say hello and let me know? Either you can message me directly, or I have a chat box here. I'm going to see if I can type a message. This is the first time I've used this. So I was like, well, gee, Greg, you're using experimental technology on a FOMC rate announcement. Pretty cool. I think I see some people here, but let me check. Hello out there. Hello. It's like a Seinfeld. So I think I'm streaming to YouTube. I don't think, okay, I see Facebook has green checks, and hopefully you are able to see my screen. You can see the chart. This is a 1 hour chart of the euro. I'm actually going to drop in time frame. I'm going to go on down, ease on down to a lower time frame into like a 5-minute chart. I'm also short Kiwi Swiss as well, and you can see we are finding a little bit of support here in this 21.12, and actually I'm looking down here 120.90. Okay. So I'm also short Aussie Swiss. I got short Aussie Swiss at just spot 6930. Short the euro at 1.2112. And so I say 12, and I usually ignore that last number. Okay. Because we're using 5th digit pricing. And I'm also short the Kiwi Swiss, or New Zealand dollar versus the Swiss franc, 0.6416. So it looks like we're about 10 minutes away from the announcement, and I'm going to be checking the news as well to make sure we keep abreast of what's going on. Does Biden and Putin agree to resume nuclear talks, return ambassadors to posts? That's a good sign, but we can see that the stock market is are falling ahead of the key Federal Reserve update. So we've got the Dow Jones Industrial Average down 0.55%, or 188.91 points at 34,110. S&P 500 is at 4,229.16, down -0.41%, about 17.43 points. And with a NASDAQ composite, 14,055.56, down a little below 0.1% there. A little more than 0.1%, 0.12%. So the market is on edge, and usually when we have the stock market moving down, the indices such as the S&P 500, the NASDAQ, the tech-heavy NASDAQ, and the Dow Jones Industrial Average, it's usually a sign. I use analysis where the markets are interrelated. So you have Forex, you need money to buy the stocks, right? And stocks are either going up and bonds are going down, or the other way around, bonds are going up and the stock market is going down. So if we see that there is money flowing out of the stock market, it's usually flowing into bonds. And to buy bonds, you need US dollars for the US bond market. So that's why I took these positions. Greg, why did you take these positions ahead of time? Isn't this risky? And I said, well, given that we have this type of a dollar bullishness, in fact, I think I took a trade. I took one trade yesterday. No, not yesterday, but maybe it was another account. But I was actually the dollars. I call it the Southeastern Kentucky, which is really Swedish kroner. But we see that that rallied very strongly. Okay, so we've got 7 minutes before the announcement, the interest rate announcement from the Fed, and all eyes are going to be on Jay Powell and the Fed to see what the announcement is going to be. So it's widely expected that they're going to leave rates unchanged, but it's the guidance, it's the language, it's the jawboning that they'll use to the market's going to say, hey, there's a lot of inflation. Lumber was high, copper is high, meat is high, oil is at multi-year highs. So why aren't you raising rates in order to stabilize the economy? The two jobs of the Fed are for full employment and also price stability. That's the two jobs of the Fed mandate. The ECB doesn't have that. The European Central Bank doesn't have that mandate. That's the counterpart to the Fed. The Bank of England, you have the central banks, the Bank of Canada, these central banks, or the Reserve Bank of Australia. These central banks control the velocity, or the amount of money that's available in the system. And during times of severe crises like the global the pandemic, and also the global pandemic, and also we had the global financial crisis not too long ago. And when you have these types of crises, central banks have a tendency of printing more money, making loans easy to obtain in order to support the economy. So it's almost like life support for the economy. When they actually maybe end, they try to normalize interest rates. Interest rates are historically low. They want people to invest, to put money in the stock market in order to jumpstart the economy. So if the economy starts to recover, then rates have to normalize. So you have to reduce that amount of money by raising interest rates that restricts the amount of money in circulation, and where it will cause prices to fall. That's the tool that the central bank uses to fight inflation. Okay, but when they raise interest rates, it also raises the value of the currency. Okay, so a rate hike would be or a sign of tightening, or a sign that they're concerned about inflation, would be bullish for the US dollar. And it would be bearish for things like commodities and gold and oil, and because those commodities are priced in US dollars. And the stronger the dollar is, the more commodities they can buy, which lowers the price of those commodities. I know it's a lot. That's why I offer a 12-week course, my Pip N Run course, to help people scalp the market and also learn how these market analysis work together, so they can not just react to price, but actually forecast it and notice these long-term trends that armies of Wall Street economists actually take a look at. Okay, so I'm making a speculative bet. I am betting that the U.S. dollar will get a little stronger after the announcement, and if I can get a quick push down, I'll take my money and run. So I haven't been in these trades very long, maybe an hour or so, and so again, I'm using a platform called C-Trader, and remember, you can reach out to me at greg@elitetradersuniversity.com if you have any questions, or if you're watching this on YouTube, leave a comment, if you find this helpful or interesting. And so again, we have about 3 minutes left, and let me go over my setup. I have a trend line drawn on a 5-minute chart, and yes, we're making higher highs, but notice how these highs are hit by lows, and then the price action is just twisting around. Okay, but we did find a trend line where price bounced, rose, and then bounced again, and then rose, and then bounced again. So right now we're bouncing on a trend line, and I'm believing that this trend line may break. We'll have enough velocity from the announcement to break, and we'll break south. Okay, that's what I am thinking. Now, I could be wrong, and I believe that I would be entirely, fully wrong if we break above this top side resistance here. So let me get back. I have a couple of moving averages here. I have a it's a 50 period moving average here, and the 733 period moving average here as well. And this basically is acting like a synthetic trend line. Okay, so we are about 1 minute. Fed imminent. The Fed announcement is imminent. $1:59. We have 34 seconds before the announcement. Again, I'm looking for possible dollar rally and get all kinds of alarms. And we have 19 seconds. Looks like we get a little push up, a little wick. One spot 2114. This is a 5-minute euro chart. And we have 2 seconds, 1 second, and boom, bam, there we go, oh, boom, there we go. Bam. Click, click. Okay, I'm holding this Euro CAD. This is a long-term trade. I'm going to hold that. But bam. Oh, okay, we've got a drop there. Okay. Breaking news: Fed holds rates steady but raises inflation expectations sharply and makes no mention of taper. Makes no mention of taper. Again, breaking news: Fed holds rates steady but raises inflation expectations sharply, makes no mention of taper. And we have the Dow Jones Industrial Average down 153, and we're going to limit out on this trade. We're very close to our limit. Let's see if we can get very close. 120.60, 5.5 pips. I'm going to take my money right there. Boom. Okay. Boom. We're gonna hold on to that. Boom. Okay. So $11,480. Our Aussie Swiss trades, our Kiwi Swiss trades, all of them limited out. And we got 26 pips on the euro, just on the breakout from the south side breakout. Okay. So that is and then this is a loss we took earlier from that. But we had our euros, all of our euros during this trading session were positive during this trade, and we made $11,480 in a matter of minutes. You can see that where we entered a trade and then we exited in championship form. This is what we forecasted, and our forecast came to pass. Okay, so that's how we trade the FOMC. This is how we trade the news. If you are interested in learning how to trade like this and our system of predicting and not just reacting to price, but actually forecasting price as we were in trades before the announcement, it's almost like we had inside information. And when you learn the Pip N Run system, you have a crystal ball. It's like having tomorrow's newspaper today. TNT, it's like dynamite, right? But let me go ahead and again invite you to join our free Facebook group, theforexcashmachine.com. That's THEFOREX cashmachine.com. That's our free Facebook scalping group where you can interact with me and learn more about how I enter trades in the market. You can interact with a lot of my former students. Check me out and see the results I get from my students. You can also apply for mentorship at elitetradersuniversity.com/apply. Okay. Talk to you soon. Thanks so much. And you guys have a great evening, a great day, wherever you may be. Peace and pips. Happy pipping. See you on the inside. Greg McLeod signing out.
If you want to learn more about profiting from the Forex market, go to www.theforexcashmachine.com and sign up for a free training webinar. Get the secrets from Greg as he reveals how to earn limitless income. Learn more to earn more.